You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again to break down the wild and woolly world of futures options. Yes, it is time for TWIFO. My name is Mark Longo from theoptionsinsider.com. Those, of course, from the ever-exciting network upon which so many of you are having a good time these days. Remember, if you're listening on demand, all we ask is if you like what you hear, keep rating and reviewing so new folks can continue to discover this show. It has been fun to watch the progression of so many folks coming in from, let's say, a newer show like a boot camp, or not new in terms of time, they've been running for a long time, but newer audiences all the time discovering options. They discover boot camp, they discover OPR, maybe crypto these days as well. People coming in through crypto who don't really know much about options, and then they migrate to a show like TWIFO. It always has been fun to see that progression. So if you want to help keep that flowing, leave a review wherever you're listening to this show. And of course, if you want to go above and beyond, join us live for this show, for everything else we do throughout the week, for exclusive programming on Tuesday with pro Q&As, on Friday with options oddities and giveaways and a whole bunch more. Theoptionsinsider.com/pro is the place to go. And let's see who's joining us on the old CME and FTSE Russell hot seat today. It's our old friend, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to TWIFO, sir. It has been too long.
Always a pleasure to be here on TWIFO, my favorite show title on your whole network.
It is a good one. It is a good one. As we keep on rolling, let's see if you like all the segment titles as well, because it is time for the movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything moving to the light side, a.k.a. the upside, and to the dark side over there at CME this week. Mr. Uncle Mike, I think it's fair to say that this report this week, a little light side biased. I'm looking here right now. I can count 1, 2, 3, 4, 5. I can count six dark side names. And that's it. So we could pretty much assemble a bottom 5, and that's about it. But that said, Mr. Uncle Mike, it's your choice. You're our guest this week. Where should we begin our journey this week?
Movers and shakers and quackers and quakers and butchers and bakers. Let's go to the light side then.
All right. Uncle Mike is full of rhymes today. Wow, he's all fired up. I think you had a Red Bull between shows here. Let's go. By the way, listeners, you can see this report for yourself. This is usually reserved for the pro level users over there at Bantix. And by the way, if you're listening to this show, if you haven't kicked the tires and lit the fires over there at Bantix yet, what are you doing? BANTIX.com. Just saw Nick for the first time in person in a couple of years as well recently. They're working on a lot of cool stuff over there. So check it out for yourselves. Bantix.com, BANTIX.com is the place to go to get access to all these premium offerings, including this. This is the one report we give you access to in terms of the premium stuff. That's you can't get anywhere else. So we tweet it out. CME tweets it out right before showtime. So you follow either of us, you should be able to see it. And you will see that it is pretty heavily light side this week. A lot of green on screen. So to the light side we go. In fact, it's so green this week. The Russell 2000's up over 3.25%. It's can't even break into the top 5. It's only number 8. So number 5 we go. Let's go to Brent. Don't talk Brent all that off on the show. Brent this week up 4.01%. So to the energy we begin our journey here. Then number 4, we don't see the Dow in there, but the E-mini Dow up 4.26%. Dow roaring to life this week. Number 3, it's our old friend, frequent offender. It's Oats up 8.68% this week. It was number 5 in the other direction last week, off 3.75% last week. So Oats have been rocking and rolling of late. And again, before you get all excited, let's talk some Oats. Yeah, there's going to be about 6 contracts probably on the tape this week. So, not a lot of options paper going on over there. Same story for our number 2, another frequent offender. This keeps up. We may have to add Oats and Palladium, our number 2 name, to our list of frequent offenders. Right now, I say there's 3 names if you throw them out there all the time. It's nat gas, it's Bitcoin, or it's lumber. One of those 3 is going to be somewhere in our top or bottom 5, our movers and shakers of your week. We might have to amend that to a 5 now and add Palladium and Oats to that. Palladium, once again, number 2, up 9.43% this week. It was number 1 in the same direction last week, up 16.36%. Man, that's a lot of action in Palladium. Not to be outdone, though. Nat Gas says, step aside, kid. This is my spot. This is my throne. Yet again, up 11.03% this week. It was number 2 in the same direction last week, up 7.64%. So, just a ton of action in Nat Gas. Now, because we like you, we've managed to cobble together a bottom 5, but that's pretty much it. Don't ask us for any more than 5. Maybe we can give you 6, but that's about it. It's all green on the screen this week. Number 5 to the dark side is lumber. Again, another one of our frequent offenders, off 1.81%. It was number 1 in this direction last week, off, get this, 29.23% last week. So this is a pretty quiet week for lumber. Number 4, it's Bitcoin. Again, all 3 of our frequent offenders here in it again today, off 2.44%. It was number 7 in the other direction last week, up 3.88%. Number 3, off to the ags now. We got a little bit of an ag kick going here now. Number 3, it's corn, off 2.62%. Number 2, it's KC wheat, off 5.08%. And number 1 with a dark side bullet, SRW wheat, a.k.a. Chicago wheat, off 5.27%. Mr. Uncle Mike, I know you watch a lot of different complexes like the metals and indeed the rates, but also you play a bit in energy. And, our light side is dominated by good old nat gas. We have Brent in there as well. So I think we have to start in energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, let's do it. Let us commence our journey with energy. You guys know where to get access to all of the free reports that CME puts out for you. Again, these are kind of the free version of the pro tools that are available over there on Bantix. But we like you folks. We give you guys these versions. These are available all the time, 24/7. So you could check these reports whenever the mood strikes you. Right now, head on over to cmegroup.com/TWIFO, TWIFO, and then go into that asset class, drop down, go down 3 to energy, and then 3 more in the product family to natural gas. That is where we will begin our journey. Uncle Mike, you've been so hyped up about all things nat gas. You're even talking about it last show on the option block. What has been lighting up your tape in the world of natural gas these days, sir?
Well, the first thing is if you look at a daily chart of it right now, it peaked at a little after 11 o'clock Chicago time today at $9.44, and it just has fallen off the map. It's down to $8.78 right now over the course of the last couple hours. So there's been a lot of sellers in the nat gas space today. I've been busy doing shows, so haven't really had a chance to look to see what's going on with that. But that's the first thing that's intriguing me about that. Next thing is just the big run to the upside with which natural gas has had for 2022. It's almost tripled at one point. And I'm just looking at the beginning of the year. We're around the 4 mark. Well, I shouldn't say tripled, a little more than doubled. And even for nat gas, that's a pretty big move over the course of 5 months. Yes, it is typically a very volatile commodity to trade, but it's definitely gone higher. And then I think just a lot of that has to do with not only inflation, but also the situation in the Ukraine could not have hurt the bull case for natural gas. So I'm looking at this, and I have an uncle who just recently got out of just did a lot of selling in his dry cleaning business. And so he's looking at this. He's like, I'm seeing where natural gas is going to heat my boilers. And I don't think what I did was a bad move at this point. So we got a lot of movement going on in the nat gas space.
Yeah, nat gas is one of our top 3 offenders here. Any given week, nat gas, Bitcoin, or lumber, chances are one of those 3, if not all 3 of them, are going to be featured in our movers and shakers. And once again, nat gas kind of blowing the doors off. When we kicked off the show, we had that front future, the one going out in a day. So it's going away pretty quickly. At a little bit over 9 out there. That's kind of the case for a lot of these futures in the front portion of the curve, hovering right around the 9 handle after having gotten a little bit higher earlier in the session or even earlier in the week out here. How much paper is going up this week in nat gas options? Well, I think a metric ton is a good starting point. 571,000 contracts on the tape right now in nat gas. Usually on a decent week, we see 400, maybe 440. 571 is a pretty decent clip out here for nat gas listeners. So people are slinging themselves some nat gas. Thankfully for us, it's not all like an equity where it's all going away tomorrow. 29.3% of that nearly 600,000 contracts is going up in the August contract this week. That has 61 days to go. So we're going to hang out there. You may be asking yourself, what is the vol in such a hot, crazy, blowing the doors off type contract? It's an 88 right now. It's actually off about 1.5 points on the week right now. But that shows how frothy nat gas has been. You know, if you've listened to the show for a while, nat gas vol can get well into the triple digits very quickly. And even right now at an 88, it is more volatile than your Bitcoin or just about most of the equities you probably trade out there as well. So nat gas looking pretty robust, pretty frothy from a vol perspective. By way of comparison, VIX is below a 30 again. It's at about a 28. So a huge chasm in terms of volatility between natural gas and even your broad equity market right now. Let's look at the skew. And last week, the puts 3.7% cheap. So not a lot of love for those last week. And this week, even less, 8.2% cheap. So the puts getting crushed out here this week. Calls last week, 5.2% bid. So again, when I'm talking about these percentages, listeners, this how much more, what percentage more you have to pay in terms of vol above or below the at-the-money vol price. So in this case, we're talking about an 88 at-the-money vol. For the puts, you're gonna get those at an 8.2% discount. And the calls right now have gone from a 5.2% premium to a 7.2% premium. So more juice in the calls right now, which shows you that's still where the interest/concern lies out there. And again, with nat gas poised to rocket up at a moment's notice, it's kind of hard to blame people. And Uncle Mike, this is kind of scary actually. What the number one hot contract is. I won't make you guess month or anything. Let's just guess a strike. What strike do you think is dominating the tape right now in nat gas options this week, sir?
I'll go with 12.5.
Wow, pretty good 12 strike actually. Yes, that's pretty close. I'll give you a close bullseye for that one. How about I'll give you like the 8 ring or so out there.
I'll take it.
Yeah, that's not bad, actually. Yeah, that's kind of scary because for a long time we were talking here on the show, oh, that 7 handle, that 7 strike is active all the way through the end of the year. Then it started creeping up. Then we started talking about, oh, the 10 strike. The 10 strike's really active. A lot of 10 calls trading all the way through December and into beginning of next year. Now, Uncle Mike, we have reached the 12 strike level, 12 calls this week in August, doing 39,000 contracts this week, 21,000 going up yesterday. So no love for them Monday or Tuesday. Didn't really trade much at all. Then they light on fire on Wednesday, 21,000 of those, most of that, all that opening. And today, 16, almost 17,000 going up. So almost all of that 39,000 contracts going up in the last couple of days. Looks like there might be a vertical because the 12.10 calls also traded 20,000 times yesterday. That would be a very weird vertical. The 10. Maybe they bought both. We've seen crazier things in commodities with weird strips. And the 12.10's also trading 13,000 times again today. So there's a chance there's some sort of weird vertical, the 12-10 or some sort of ratio, or maybe a stupid. They bought them both, listeners. Either way, the 12.10s are right behind it with 33,500. So, wow, I don't know. You like that one, Mr. Uncle Mike? You like that 12-10 vertical 33,000 times?
I mean, if you want some cheap exposure to nat gas because the vol's too high for you, and if you think it's going to go over 12.10 and you want to put up a 33,000 lot, then God bless you. But hopefully it doesn't happen too soon so you can make some money on it.
I want to buy these 12s, but they're a little bit rich for my blood. So I'm going to sell the 12.10s against it. Give myself a whole 10th of a point of wiggle room to play there. Yeah, I'll have to go dig into that one a little bit to see what they did. Maybe they bought the stupid. That would be a weird stupid. I'm not sure. Why is there a 12.10 even listed? I need to go dig into those strikes some more. That's a weird one. We have not seen 12.10s on our radar before. You out there slinging the 12.10s, listeners? Hit us up. Let us know. Followed by a more, shall I say it, normal strike. Before we even get there, though, before we even get to the 10s, let's go back to the July 11s, also lighting it up this week to the tune of 34,000 contracts. So, yeah, it is all calls all the time again this week. Those 11s also trade. You know, it went up again. It went up. 11s went up 22,000 times on Wednesday, and then the 11-10s traded, Mike, 20,000 times on Wednesday as well. Okay, so something is weird here. There are 11-10 calls and 13-10 calls listed in NatGas. Why, in the name of God, Mike, are there 11-10s and 12-10s trading?
Someone might want some narrow-range condors of some sort. I don't know.
I've been doing this show for a while. I've seen some weird verticals. I've seen weird strips. God knows you've seen some weird flies going up and way upside gold. But 10th of a point wide, whatever these are, going up 20,000 times? Wow, that may take the cake, listeners. Do you know why there are 10, 11-10, and 12-10 calls listed on either of these? Was there some sort of strange adjustment to these contracts? That is very strange. Wow, 9-10's also trading as well. Someone has a weird axe to grind here. I'm gonna have to reach out to Mr. Nick and his team over there to see what they're seeing on these. What the heck is going up? Because that is, well, those are all opening. They were opening on both legs. So whatever that was, a really tight stupid, a really tight vertical. There's no other paper going up anywhere near that's even close. So it's 11, 11, 10, 12, 12, 10. That's very weird paper. Listen, I need to dig into that a little bit more. So there you go. If you had 11-10s or 12-10s on your bingo card for NatGas this week, you are the winner chicken dinner. Wow, that is weird. We also, that's not rich enough for your blood listeners, 15 calls were also trading in September 10,000 times. They traded 7,000 times in October. It's pretty much a call palooza, Uncle Mike. Does any of this kind of concern you, sir, that we have not seen the worst of this and we're going to be dealing with pretty aggressive nat gas prices? And looking here, going into February of next year, the 11 calls we're trading. Doesn't seem like anyone's betting on an aggressive reversion anytime soon, Uncle Mike.
No, natural gas, it's not a fun thing to have expensive. Unless you're long the 1310 call spread, then I guess it would be fun. But it's typically not pleasant for society. It's funny. Earlier, about a week ago, we got a tankless water heater for my house or for our house. And so we didn't buy it for the ability to save money, although I guess we can save a little bit of money every month on our natural gas bill. But I'm looking at nat gas. I'm thinking, well, maybe with it being this high, maybe that was a good purchase economically. We didn't buy it for that reason. We just for our hot water needs. But nonetheless, you never know.
You never know indeed, but we do know that energy is lighting it up. We mentioned Brent in our top 5 here this week as well. We don't really see a lot of Brent options paper. So instead, Uncle Mike, since you're joining me today, we'll head on out into the land of WTI. I know crude and energy in general has kind of been catching your eye. So outside of nat gas, sir, and these markedly absurd 11:10 and 12:10 calls, what's been catching your eye in WTI and the land of crude, sir?
Well, we still have not come back to the peak levels with which we were in early March with crude. We got the high 120s or low 130s, I believe it was, with crude. And so we still have not matched that as of yet. Now, don't get me wrong, or gotten back to that as of yet. Now, don't get me wrong, we started the year off to where crude's in the high 70s. Now we're over 110. So it's definitely had a pretty violent move to the upside, but I think it'll be interesting to see if we can make another run at that spike we had back in March. So that's one thing that I'm seeing. The other thing is that we are looking to test right now, today, the highs that it made on May 17th, not quite, just a little under 2 weeks ago. And so right now we're in the 114. So it still could make a run at that tomorrow. And I see that. And then the other thing with which I'm seeing, I think you saw it today, you had mentioned it, we have $5 gas in Chicago right now. I think the next move of what we are going to start seeing in some way, shape, or form, the fact that it's an election year, I think we might get some type of gas tax relief in some way, shape, or form, because the one thing that I've noticed, not the one thing, but one thing that I have noticed with the general public is that even though the portion of your income of what the average income is, of how much you pay at the pump, is far, far, far lower than what it was back in the 70s and back in the oil embargo that we had, and just based on inflation of where we are, it really ticks off Americans to pay a little bit extra for gas. And so I could definitely see some type of gas tax relief in the near future going into the elections. So we'll see if that happens.
We will see indeed. I see a lot of our chat talking about Cybertrucks and more electric vehicles. Yeah, maybe this will be the kick we all need, whether it's a Tesla or something else, to start maybe swapping some of these massive gas guzzlers or something that perhaps has a little bit less impact on all of us around here. Let's keep on looking here. Let's go out to the land of WTI, where everyone is guzzling up all the crude they can get their hands on. WTI right now, 114. When we kicked off the show, 114.16 out there right now. So, yeah, a lot of upside still. It's up 3.5% just this week, listeners. So, continuing the rampage to the north. How much paper going up in nat gas this week? Should be WTI this week. Actually, a little light. Usually this one's around 400,000 contracts as well. A paltry 318,000. So, almost half what nat gas has put up already. So, not quite as much paper going up in WTI this week. Let's see if we see any weirdo strikes out here. Don't see any of those yet, listeners. By the way, of that paper, about 30% going up in the July contract. It has about 21 days to go. So we will hang our hats out there this week. Where is vol right now in WTI? You might be asking. It's at about a 43 and a third, off a little over 5 points this week. So coming in a wee bit, still frothier than your traditional equity and your equity index, but obviously pretty much half of what we're seeing out there in nat gas right now. So nat gas taking the crown for volatility, at least right now. In terms of skew last week, the puts were kind of 1.2% bid, and they remain pretty much this week, 1.6% this week. Not a lot of action in the puts. The calls last week, 2% rich, so you have the money. This week, they are 0.1, so they have come in pretty much to be exactly in line. So what we have is not really much of any skew to be found out here. No real bid or discount to the calls or the push, which tells me, at least for here in this July contract, the market's kind of just twiddling its thumbs. They don't know which way we're moving. If you're looking at all the rest of the contracts that go away earlier than this contract, so 15 days ago, 8 days ago, they're all in a similar boat, pretty much in line with the at-the-money vol to the call side. So no crazy bid to the calls, which maybe shows that maybe some of this near-term upside has exhausted itself. I'm looking a little bit farther out now. Let's go out to September, 1.8% bid, October, 1.9%, December, 1.9%. So we're not seeing massive bids to the calls pretty much anywhere in this term structure listing, which again, we have run up quite a bit. So that's not entirely surprising out there, but still it's interesting. So maybe all you crude bulls, maybe keep some of your powder dry for the near term here, as we're going to maybe try to suss out another level. It's always interesting to me when I don't see any real bid in one direction or the other for the skew here in WTI. In terms of action this week, I said we're at about a 114.16. That's where the future is right now. It is the 120 calls leading the dance this week here in July, doing just a tick. Actually, not take it back. If we go a little bit farther out to Dees, there's about 13,000 of the 120s in July have traded, but 20,500 actually of the 150s, 150s have traded in December. Let's see, where's the Dees future? The Dees future is actually at 99.25, so it's actually below. So we're looking at a little bit of a backward curve here for WTI futures listeners. That means the near portion of that curve is juicier from a price perspective than the longer term contracts. So that's kind of interesting. We're still seeing the 150s. They traded 20,500 times. Looks like a lot of that today, 11,000 going up today. Also seeing the 180s going up 10,000 times today. So maybe a 150, 180 vertical. That makes a heck of a lot more sense than the 12, 12, 10 or the 11, 11, 10 in that case. That one's not going to leave me for a while. I need to dig into that more. We also saw, looks like the 150s and the 180s also trading a lot on Wednesday, 7,000 times for the 150s and about 4,500 times for the 180s on Wednesday as well. So number one this week is the 150s in Dees with 20,500. Number two are the 180s with about 15,000. So it seems like definitely some vertical type of action going up between these two, perhaps on a bit of a ratio. Then we go back to the 120 calls in July with about 13,000 contracts open for number three. And then it kind of falls off from there. So intriguing stuff. Mr. Uncle Mike, can you wrap your head around that a little bit more? The 150, 180 vertical. I mean, that's not exactly good for society having a 150 crude by December. And you know what? That's weird because the call skew is not indicating a lot of interest up there. It's just kind of that one vertical. But still intriguing stuff. You like that 150, 180? Is that better than the 12, 12, 10, sir, in that gas?
Yeah, definitely. It could be like some type of major shipper or airline that just bought that just as kind of a hedge in case we have some type of rising fuel costs in some way, shape, or form. Because let's face it, if we continuously have high oil prices, eventually people don't like paying that and they stop paying it, and it's a problem. And so I remember Southwest Airlines many years ago with the brilliant way with which they hedged their fuel. That was one of the things that they really did a good job of about 15 years ago. And so if I'm an airline right now and I'm concerned about that, one of the ways with which I am hedging is I am buying some call spreads.
Yeah, it probably is a producer of some type, maybe an end user like an airline coming in and just trying to hedge a worst case scenario. You're right. Southwest got a huge advantage of hedging that. It always mystified me how they were the only airline that really did that. If you're an airline and you have one major risk factor to your business, maybe you want to think about hedging that. It seemed crazy. Then after that, when all the others didn't, that's when the airline CEO started writing histrionic letters about how no one should be allowed to trade in the crude price markets except for end users because they were driving up price. It was idiotic nonsense that we started to see. But yeah, that's what happens when you miss out on your hedge and you get mad. But yeah, probably is someone just looking to cap their upside in these insane markets. I don't think anyone's really looking for a crazy move to 150, but then again, we have seen crazier things. Before we get out of energy, Uncle Mike, we got a question coming in here from you from our live chat from Nichols. He says, is Uncle Mike still trading XLE, and what is he up to with these crazy energy prices? So I know one of your preferred vectors for energy trading, Uncle Mike, when you're not talking futures options, is good old XLE. Nichols wants to know what you're up to out there.
For the most part, buy and hold. But what I have been doing is with one client, we wanted to take some risk off the table. So I did sell some of it, but we're trying to get back in now. So I've been selling puts for probably the last couple months with it around like the between 78 and 82. And I sold a covered call to initially get out of it, and then just been selling premium week in, week out, just kind of hoping to get back in. And for today, I think we got out at, and this is just with one client, we got out at roughly 81, I believe, on the stock. And so I've just been selling 78s, 80s, 79s for the last few weeks. And if I get back in, I get back in. But if not, then the client's risk is in pretty good shape. So pretty happy with that.
I know you'll be pretty happy. Talking a little bit of the old metals, so let's get into that. Next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, to the metals we go, listeners. A pretty active week for the metals. We had palladium coming in at number 2 on our movers and shakers, up almost 9.5%. It was number 1 last week, up 16.36%. And silver and others kind of nipping at the list, but not quite making it out there this week. But palladium continues to dominate. But nonetheless, Mr. Uncle Mike, sir, I know you're a big metals guy. What's catching your eye out there in the metals land, and where should we start our metals journey, sir?
Well, let's go to the shiny stuff, gold.
All right, gold. We can do that, listeners. Head on into that drop down, pop out of energy, and then go down all the way to the bottom of the list to metals. It is an alpha order list, after all. Then go into product family, go into precious, and then we're going to go into the shiny stuff, the good old gold there right at the top of the list. Gold coming into showtime, 1856. So it has rebounded about 100 or so handles from it was trading in the mid 1700s range not too long ago out there. Still obviously well away from the 2000 level a lot of people have been looking at out there. Mr. Uncle Mike, it's been kind of a frequent refrain / complaint from the metalheads out there that the metals not really delivering out there what they expect in these kind of markets. Is that your takeaway as well, sir?
It is, and I'm pretty surprised that we haven't also. I mean, I think a lot of it has to do with the strength of the dollar, but if the dollar starts going down with any significance, then I could definitely see a surge coming in the metals. A lot of times through the years, you always hear about how if something bad happens, metals go higher, but we've had a lot of bad things happen, and since March, we're down almost 10% in gold. I think we peaked out at 2078. Now we're at 1857. And so we've definitely come down a little bit in the gold area. So definite disappointment if I were a gold bear or a gold bull.
Yeah, the gold bugs used to be our most fanatic listeners. Now they've been usurped by the meme stop kids and the crypto kids. So kind of pick your poison. Who's the most fervent? Let's get on into it right now. How much paper is going up in gold right now? Kind of a light week, all things considered. 137,000 contracts on the tape right now. That's pretty light for gold. Of that, a little more than a third, about 37.5% going up out here in the July contract that has about 32 days to go. So let's go on out here to, let's go to the July contract. Again, what is the vol in gold? Not quite as juicy as, let's say, a nat gas, listeners. Nat gas was at about an 88. Gold at about a 14.64, off a whopping 2 points. That's a lot of vol to come off of gold. If you know anything about gold vol and just precious metals vol in general, it can spike pretty aggressively, but it comes right off again really quickly. So if you want to take your long vol off, you got to do it pretty judiciously and quickly out there in gold land, unless you get caught up in kind of some of this vol implosions that we've seen out there. Skew-wise, metals are always interesting to watch from a skew perspective. Usually a lot of action to the calls, but they can move around a little bit. Let's see what happened this week. Last week, the puts were almost a full percentage point bid, not much, about 0.8 of a point. So pretty much in line with the at the money. And this week, they've swung the other way a little bit, about 1.2% cheap. So a little bit of action on the puts, not a ton. Last week, the calls were where the action was, 2.3% bid. This week, nearly 5%, 4.9% bid. So the interest, the bid, the premium is to the calls out there again this week, even though the most active contract this week out here in gold options wasn't the calls. It was the 1,800 puts doing almost 4,000, 3,917 contracts. Almost all of that, about 3,300 coming on Monday. And looks like someone was closing those because the good chunk of that was closing. So taking some puts off the table on the 1,800 strike on Monday. Maybe they thought, okay, we got down close to it. I'm going to take my money off the table. Maybe they were right in that strike and they got a little bit concerned when we were flirting with it. Either way, they decided to get the heck out of Dodge on Monday. The rest of the week, kind of light. Right behind it, we have the 2,200 calls. So there were some calls trading. 1,700 of those on Monday, about 2,000 on Tuesday, and then pretty much nothing for the rest of the week. So all opening to the upside on those 2,200s, which is probably why we're seeing a little bit more of that bid growing on the call wing. Also, the 1,900s trading about 3,000 times this week as well. The big day was Tuesday, about 1,000 going up there, 800 on Monday, and about 800 again today. So it looks like opening upside call action here in gold, which is pretty much normal, and then some closing downside put action. But, it's gold, so we have to scroll a little bit farther down to see some of the, shall we say, interesting paper that usually goes up here in gold. If you want a little bit of bullish action, listeners, just go down a little bit in the gold options. You'll find something. This week, it looks like it's the 2,400s going up in January of next year. Looks like they are actually, no, these are February of next year, going up 2,000 times. Again, 1,200 on Monday and about 800 on Tuesday. We also saw the 1,900s going up about 1,900 times. They traded more actively throughout the week, about 700 on Monday, 700 on Tuesday, a couple hundred on Wednesday, and about 400 today. So it doesn't seem like it's entirely related paper, but still, the 1,900s and the 2,400s in February of next year, lighting it up to the tune of about 22,000 contracts each. Let's see. Really quickly, Mr. Uncle Mike, I know you're a big silver bull. Want to hit on silver as well?
Yeah, for sure. We can do that.
All right. What's lighting up your tape in silver as I call up the numbers, sir?
Well, similar with silver, similar type of action. But the other thing that I am noticing with silver in that, let me get to my other chart here. Sorry. We are catching a little bit of a rally right now intraday. Still have not hit the peak like we had in March. We were kind of made a run at it in April, but so far since late April, we have kind of really gone down. But the one thing that I'm noticing on silver is that we're kind of sticking around the 22 level for the last few days. And we had support in silver back in September around that time, a little bit in October, a little bit in December, a little bit in January, a little bit in February. So we're kind of in I don't know if I want to call it a magnet market, but we're definitely sticking around that 22 level. That's for sure.
By the way, Uncle Mike, you will be dismayed to learn that we discovered last week on the show that silver has now been trumped by lean hogs. Lean hogs put up nearly 40,000 contracts last week, and silver is usually around 17 to 20,000. So lean hogs doing 2x the silver paper these days. What say you, sir?
Oh my gosh, that is a sign of the times when pigs don't fly, but pigs are outpacing silver.
A lot of hog love. We actually had a guest last week talking about flies and trades and the hogs and in corn. It was kind of fascinating to check out some of those flies, listeners. It was certainly interesting, to say the least. Let's see, silver is also interesting this week. Coming in almost 22, 21.95, up about 1.5% this week. In terms of action, like I said, about 18,000 contracts. And weirdly enough, almost 41% of that was in December. So longer term paper lighting it up out here in silver. I guess we're going to hang our hat out there, listeners. And in terms of vol, what's the vol in silver? It's a decently frothy 31. So more than 2x what we're seeing in gold vol. Skew wise, let's see a little bit of action on the calls, not a lot on the puts. The puts last week, 2.8% cheap. This week, 2.5% cheap. So not much change there. The calls, 10.2% bid last week. 14.4% bid this week. So if you're coming in to buy calls in silver in December, you're paying a bit of a premium to do so. In terms of action, what was the action on here? Oh, Uncle Mike, you're going to like this. It was the 50 calls, 5 O's, doing about 1,200 contracts this week, Mr. Uncle Mike. Most of that today, about 1,000 going up today. And also the 40 calls going up today. So 1,009 of the 50s have gone up today, and 1,008 of the 40s have gone up today. So a 40-50 vertical, I could see that. We're also seeing action 400, 300 contracts each in the 30 quarters, 30s, 34s, and 33s today. So maybe a bit of a funky, weird fly or strip. Not quite the standard fly ratios, but people play around those ratios all the time. Mr. Uncle Mike, are you a fan of a little bit of the December 40-50 call vertical in silver, sir?
Well, I think I should be, because I'm kind of in a position similar to that for in my silver positioning for my clients. Not a huge one, but yeah, I mean, I like spreading silver. I think that the option prices usually work out really well. So even if you don't even like it that much, if you like it a little bit, the option skews that exist on it are very favorable, in my opinion.
And what else could be favorable is a little bit of equity and volatility. So let's get to it.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, let's get to the equities. You know where to go in that drop down, pop on out of the metals, and then go up about 3 slots to equity indices. We're going to kick things off in the rut, but we could hang out in a bunch of different places out here throughout equities. Before we dive into those, though, let's set the table from a vol perspective. And with all this green on the screen, you expect equity vol to be coming in a little bit. That's pretty much what we've been seeing. RVX, so the VIX of the Russell 2000, still north of 30 at about a 31.66. That's down a little over 4, about 4.1 points from this time last week. VIX cash was at about 27.25 when we kicked off the show. That's a frequent point of discussion and or debate. What's going on with the VIX right now? Why isn't it really buying into what's going on in the markets? It seems like, especially last week, we saw aggressive sell-offs. Didn't really see the commensurate pop you might expect in VIX land. What does that mean? We've been debating that a lot on the network this week. VIX 27.25 right now, down 3, almost 3.25 points from this time last week. VVIX, this one is interesting, listeners. VVIX, so the volatility of volatility, the volatility of VIX itself. A little bit shy of 95 right now, down almost 14 points from this time last week. Why is that interesting? Well, that's pretty much the first time in over a year that the volatility of VIX has broken 100 to the downside. You have to go all the way back to April of last year to really see another time when we hit that level very briefly and then bounced right out of it. And then we hit it again in September of 2020, crazy year that was, and then bounced right out of it again. So pretty much outside of those few moments, VVIX has been well north of 100 since the onset of the pandemic. So seeing that break through 100 again to the dark side is a very interesting indicator, and one everyone should be paying attention to. Vol Q, so the at-the-money vol of the NASDAQ 100 at about 31.75 right now, down about 2.65 from this time last week. That puts that VIX to RVX, so the large cap to vol cap, easy for me to say. The large cap to small cap vol spread at about 4.4 points. That's almost a full point tighter, about 0.9 points tighter than it was this time last week. And the VIX to vol Q, so the S&P to NASDAQ vol spread, right around 4.5, about almost 0.6 of a point wider. So once again, those two spreads are almost exactly the same. They're about 0.1 of a point different, which is in and of itself very strange. Mr. Uncle Mike, sir, a lot's been going on in the world of equities and indeed the world of volatility. What has been lighting up your tape out there this week?
Well, in the world of volatility, the main thing that's been lighting up my tape is just that with the VIX, we haven't really gotten a big, we haven't gone up to 40 yet. And so with VIX, I think it's just kind of interesting that if at the beginning of the year, we were around 17, and we got up in the high 30s a few times, but we have not touched 40. And with the fact that we actually had a near 20% correction, it surprises me that the VIX never went any higher. Now, I know it's gone down slowly, but I am surprised it hasn't happened yet. Now, I'm of the school of thought to where if it doesn't happen, it doesn't mean it has to happen. But I am very surprised that we have not had that move as of yet. Just the other things with equities, just looking at the E-mini, S&P E-mini right now, we're just under, we're at 40.59 at this stage. We had a high today of 40.73. I think it's going to be interesting these last 45 minutes, how this closes, because we actually had a high of roughly 40.90. I'd have to look to see what the exact high was of the E-mini recently, and I'd like to see if we're able to break that. And so far, on the day of the trading in and of itself, we got to the levels with which we're at right now at probably about 11:30 today, Chicago time, and we really haven't moved that much since then. So just kind of been a sideways market. So we'll see if this last hour can bring us some more movement.
Uh-oh, the bears are coming for you, Uncle Mike. Watch out. They've just been sharpening their claws all day. Here they come.
Oh,
baby.
Boy.
Here they come for the perma bull. That is Uncle Mike. I'm just joking. Don't get angry, all you bulls out there. Let's see what's going on out here from a equity perspective, again, let's dive into small caps right now. How much paper going up in small caps? About 22,000 contracts right now. So more than a silver, but not quite as much as a lean Hawks, if you're looking for a barometer of activity out there. In terms of the most action, it's in the June contract. That's where 32% of the paper went up. That has about 22 days to go. That is refreshing in and of itself, that we're seeing so much paper out 22 days. Usually with an equity, it's all 1 day to go. So if you pull up the E-mini right now, S&P, it's going to be all 1 day to go. So nice to see a little bit of a change of pace in the small caps. Right now, 1840 is where the small caps are hanging out, up 67 handles this week, about almost 4%. Again, not enough to break into our top 5. That's how aggressive of a week it was this week. In terms of vol, like we said, the RVX is still north of 30. The 22-day vol in small caps, not quite as robust, 29.85, so down about 2.25 points. So it's shy of 30 again. Skew-wise, man, the put's starting to come to life again. Last week, the put's 9.1% bid. This week, 12.1% bid. So puts roaring back to life. Last week, the calls 8.3% cheap. Now nobody wants them again. They're down to about 12% discount to that almost 30 level of the at the money ball. And in terms of where the action is, it was 1870 calls. So I said we're at about an 1840 right now. So these are 30 handle out of the money calls. Everyone's always asking about small delta. These aren't that small delta because they still have some time to go, nearly 3 weeks. So usually we're seeing people talking about and asking about these crazy 5 delta calls. That was all the rage during the height of the meme stock palooza. Seems like some of that has mitigated, but we still are seeing a little bit of funky action out here. Let's see if any other paper is really lighting up the tape. 1,700 puts going away tomorrow. Those are pretty active this week as well, going up hundreds of times this week. So somebody has an axe to grind on that 1,700 strike, which again, we're at about an 1840 right now. They've been trading pretty actively actually all week, opening and closing. So back and forth on the 1,700 puts pretty much all week. That is interesting. Not quite as outlandish as the people who sell, the 700-800 handle out of the money S&P puts every week, but still intriguing stuff afoot. I know I could hear you. I want to get some of your listener questions, but I can also hear all the ag heads out here in our audience saying, hey, what about all the movers and shakers, wheat and corn, everything lighting up the dark side? So, okay, we'll do a real quick hit of the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, this week we had corn at number 3, KC wheat at number 2, and Chicago wheat at number 1. If you throw in the softs like lumber, they also fall under the ags, and 4 of our bottom 5 this week were in the ags. Mr. Uncle Mike, I know you're not a crazy ag head. Anything catching your eye or lighting up your tape in the green stuff this week, sir?
No, can't say that there is. But I am curious. I never knew that lumber was considered in the same category as ag, so I learned something new today.
It is a soft, so it is under the ags category, yes. So you have grains and oil seeds and softs and a few other things they throw in there. So yes, it technically does fall under the umbrella of ags, sir. So there you go. I taught Uncle Mike something today. There we go. My duty is done for the week.
Absolutely.
Let's see what's lighting it up out here. Let's go to the big dog, which is corn. It is kind of the euro dollars, the E-mini of the ags complex. 507,000 contracts on the tape, so nothing to sneeze at out here in corn this week. In terms of on the week, since Monday, we're at about a 763.5 right now. If you don't follow corn, listeners, that's off 15.25 points, or nearly 2% just since Monday's session. So interesting stuff here in the corn. But in terms of action, like I said, a lot of paper on the tape, and almost 41% of it going up in the July contract that has about 29 days to go. So we'll hang out there. What is corn vol? You might be asking. It's about a 28.5. So it's kind of in line with equity vol right now. It's kind of in line. It's more than double what we saw in gold. Kind of in line with silver vol though. So 28 is kind of a common level out there right now for a lot of the products we're looking at. In terms of skew, last week the puts 5.9% bid. This week 3.7% cheap. So that's a pretty big swing from almost 6% bid to almost 4% cheap. It's a huge swing in the puts over the course of a week. And the calls kind of unched. They were 3%, or I should say 0.3% cheap this week. Almost a full percent bid, 0.9%. So they have swung a bit as well, but not as aggressive as the puts. That's interesting. Let's see what we can find out here that was trading it up. Like I said, we're at about a 763.5. It was the 800 calls dominating the tape this week here in July, doing 28,000 contracts. let's see how that lined up. It was pretty active all week long, actually. The big day was Wednesday, 12,500, most of that closing. 8,000 on Tuesday, 6,500 today, and about 1,000 on Monday. So it looks like back and forth on the 800 strike all week long, I guess, as we started flirting with it, then we retreated away from it, people piling in and then backing off again. So that makes a certain amount of sense. Followed by right behind it, the 8 halves doing 18,200 contracts. The big day for them also Wednesday, 7,000. Again, mostly closing there. So a lot of people were fleeing from the 800s and the 8 half strikes on Wednesday. 5,000 going up on Monday, 4,000, almost 5,000 on, actually, that was on Tuesday, 5,000 on Tuesday, 4,600 on Monday, 1,300 today. So the 8 halves have been kind of active throughout the week as well. They were mostly closing all week. So it seems like folks thought 8 half was a bit of a bridge too far for most of the week out there. And then right behind it, let's see, what do we have out here? I think we fall off a little bit to number 3, which are the 740 puts going up about 10,000 times. Again, all of this was in July. That's one thing I like about the ags. They tend to concentrate their liquidity in a couple of months. It makes it a little bit easier from an analysis perspective. And let's say a Eurodollars or an E-mini, which is kind of putting paper up all over the place. Let's see, 9,900 of those going up in the 740 puts. The big day was Wednesday as well, 3,400 on Wednesday, 2,600 today. Actually, 3,500 on Tuesday, so slightly outpacing it on Tuesday and only a couple of hundred on Monday. So intriguing stuff out here in the land of corn. Wish we could spend more time on the ags, listeners, but we have to get some of you folks on the show as well. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's get to it. We've already been to the live chat. Let's go back out there. Uncle Mike. We have Option God saying, I think Uncle Mike is really a werewolf, and all of his silver love is really just a cover. So what say you? You've been outed by our chat, Uncle Mike. Are you truly a werewolf? You can tell me. I can help you, sir. I can find a priest maybe or something. We can work this out.
Ow! Werewolves of London. Warren Zevon classic. One of my favorite songs. I'll leave it at that.
Oh, so he's not answering. I don't know. That might be telling Option God. He kind of dodged that one. I don't know. He might have to load up on what do you need for werewolves. Some silver would certainly help. I'm not sure if holy water is that useful. Cross, probably not going to do much. Chopping off the head always works. So at the end of the day, no matter what the monster is, cutting off the head, a little bit of fire, that usually works. So we can experiment. We'll workshop with it. Option God, reach out to me after the show. We'll see what we can work on here. That got dark. Let's go on out to our question of the week right now. We were talking about this on the option block earlier. It's still live right now, listeners. Kind of getting back to this whole notion of, in the equities at least, people need or seem to feel that we need a blow off in vol, a pop in vol before we really can talk about concession and kind of the end of the bear market out here. So we asked you guys that this week. We said, hey, do you agree with this? And if so, what level does VIX really need to hit before you're kind of calling the top in VIX and a bottom in the broad equity market? We gave you 4 choices: VIX north of 40, VIX north of 50, VIX north of 60, and VIX north of 70. Mr. Uncle Mike, I know you kind of just weighed in on this on the option block, but have your thoughts evolved at all? And what do you think our audience is voting for now, sir, a few hours later?
I mean, I think they're still the same. I think they're still voting for above 40 is what I'm going to go with. My opinion, I don't think we necessarily need a volpocalypse, if you will, just because of the fact that everyone keeps saying, oh, we need another shoe to drop before anything happens. But this is the U.S. stock market. Anything can happen. And I could see us being at the bottom now, but I could also be wrong. So hence, that's why I like to give my 50% guarantee on things.
50% guarantee indeed. Well, right now, you are correct, sir. 43.2% of you say we need a VIX just north of 40, so obviously higher than it is right now, but you don't need to blow the cover off the ball to really to see a bottom in the equities. North of 50 coming in at number 2, 25.2%. North of 70, so you need quite the pop in vol. That's at about 22%, and a little bit shy of 10% is VIX north of 60. You got a little bit less than a day left, so if you're listening after the fact, on demand, on the podcast, you will have time to make your voice heard, listeners. We will discuss the final results, give our thoughts on all this madness. A lot of back and forth that's been going on Twitter as a result of this poll as well. We'll get into all that tomorrow on Volatility Views. All right, Uncle Mike, that music means you have survived another go-around in the CME and FTSE Russell hot seat. How did it go, sir? Did you have fun?
Always a pleasure to be here on TWIFO, the favorite name of any show you have on the network.
Although our astute listeners have uncovered your dirty, or dare I say it, hairy secret, sir, that you are indeed a lycanthrope. What say you?
I mean, so yeah, the VIX could go above 40. It could go lower. It could go higher. I agree.
Look at him dodging this one. I don't know. We should go out. Let's after the show, we'll all ring Uncle Mike's house with some silver. It's still cheaper than it was. It won't be that expensive. And we'll just see how he reacts. Huh? We'll try that. All right. We'll see how that's. In the meantime, Uncle Mike, if they want to question you more about your burgeoning lycanthropy, where should they go? What should they do?
Good gosh, you are a human thesaurus. Follow me on Twitter at Mike Tosaw, Tosaw. You can check out, I have a lot of educational videos on YouTube. Just type in St. Charles Wealth Management and you'll find a lot of them. Or if you're interested in working with a financial advisor who actually understands what silver is, feel free to check out my website and contact me that way, stcharleswealth.com.
I even cracked myself up on that one. So we were both laughing there. All right, check them out. stcharleswealth.com. You're going to miss them on Monday. No option block show. So we gave you a second dose of Uncle Mike today on TWIFO to hold you over until we gather here together on Thursday next week for the option block and for TWIFO. And of course, you guys know where to go to check out all of these reports we have running for you 24/7, 365 because we love you. CMEgroup.com/TWIFO. You can check silver for yourself. 3 a.m. on a Saturday, it's there for you. Of course, if you want to go above and beyond, upgrade to all the pro offering. And I use it during showtime. I use it all the time, the Quick Strike Pro stuff. There is a lot of great data. We barely scratched the surface on what they have to offer there. So if you want to check it out for yourselves, Bantix.com, Bantix.com is the place to go to learn more. Of course, you know where to go. Check out everything about the world of small caps, the vol, what's going on with inflation, what's going on with the impact of COVID. Recon coming up. Is it the culprit for all this June 8th madness we've been talking about for a couple of years now on the network? I'm going to put it to those guys. They're going to be on the show again soon. I'm going to ask them that exact question. Maybe we'll get to the bottom of the June 8th mystery. After we sort out whether Uncle Mike is a werewolf, next up is the June 8th mystery. In the meantime, you can find out all that for yourselves. FTSERussell.com, FTSERussell.com. Give them a follow on the old Twitter as well, at FTSE Russell, FTSE Russell. All one word. That's going to do it for us today on TWIFO. It's also going to do it for our network today. We'll back again tomorrow, noon Central. If you want to hear more about all this vol debate, noon Central, 1 p.m. Eastern for Volatility Views. Back after that, myself and the Rock Lobster holding court in the world of unusual activity. What crazy trades do we put on to get run over with this week? Let's find out tomorrow on Options Oddities. That's for all you pro folks. Then, of course, we're off on Monday, so no option block. But we are back again next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/CME. FTSE.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.